very reluctant to ease at all this year if inflation did not get to their level quickly. His quote, "If we continue to see inflation moving sideways, then that would make me question whether we needed to do those rate cuts at all."
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we will look at some geopolitical news yesterday. In premium, we have a brand new report from Goldman Sachs on copper and oil, describing what to look for the next rally if one is to come, and that would be very spread related, something that we're familiar with. We haven't had time to look at it yet, though, but we're going to share it with you before we get to it. Then we'll look at the news. Let's check prices first. What do we got here? The dollar is up 3.5 at 104.24. The 10-year yield is 4.33, continuing to creep higher. Yesterday, the 10-year yield dropped, but it's still creeping higher for the last week or so. The S&P 500 is up 20 handles, bouncing off of yesterday's lows at 51.68. The VIX is 16.5, creeping higher despite a rallying stock market. That's probably in anticipation of the non-farm payrolls data today. Gold is up a buck and change at 22.92. Very mellow, considering the very whippy behavior yesterday with all the geopolitical news we'll touch on in a second. Silver down 17 cents. Things are back to normal at 26.72. Sell silver to buy gold. At least that's what it looks like to me. Copper is trading 4.19, basically flat. Oil is down 35 cents after ripping higher yesterday, late in the day, again, on the geopolitical news, I believe. Natural gas is 169 or 170. Crypto, Bitcoin is 66.765, down 2.5%. Ethereum is 32.65, down almost 2%. Platinum and palladium are both down. Platinum 10.13, palladium 9.23, down 7 and down 12 and change respectively. Let's see what the grains are doing. Grains are up 20 basis points, 50 basis points, and 2.5%. Soy 11.78, corn 4.31, wheat 5.77. I don't know these markets as well as I should. I'm familiar with soy, but wheat's strong right now. I have a feeling that the wheat strength, although it's always potentially seasonal, I think it has to do with what's going on in Ukraine. So Russia is exporting less, or there's restrictions on wheat, and I think that's playing some havoc with the market in general. Yesterday, well, there's the homepage yesterday, and we put a lot out yesterday, and it was timely. If you're an analyst, it wasn't something that you'd be drilling down on, but we put some let's just say some special thoughts on gold and silver in the markets right now, and we have out today, and we put out a recap as well. We have out today a jobs number data previews for premium subscribers. Let's go to the main event. Well, the premium section is time spreads don't lie, copper backwardation, and oil is coming. And that's at the bottom. I haven't had time to read that yet, but their work on spreads is impeccable, Goldman. Their prediction in price on it, however, harkens back to the super cycle concept. I'm not using the word super cycle, so that tells me that this is I don't know what this is yet. Let's put it that way. I'll find out. All right. Yesterday was a big day for information. We're going to go through two things here. So where it says Fed, we're going to go through backdrop going into the non-farm payrolls. Okay, so the second part is the geopolitical aspect. So Fed. Powell has made it clear he has no interest in lowering rates until inflation is at 2% or unless there is a significant uptick in unemployment. Okay. So he's trying to talk the market out of rallying. Yesterday, as part of the geopolitical news, Kashkari inferred they may not cut rates at all unless inflation stops trending sideways and resumes its decline to 2%. That played havoc with several markets. Three, inflation has stabilized to uptick in the past month or so. That's just a statement I'm making. Four, non-farm payroll reports are increasingly unreliable due to now openly, publicly admitted cooked numbers from immigration labor. It's fascinating. It's a slow motion banana republic. The payrolls consensus today is 214,000 jobs added, ranging from 150,000 to 250,000. I have no prediction to give you except to say that, in a normal Fed's going to cut if the economy is weak environment. Weak jobs numbers is bullish for stocks, and high jobs numbers is bearish. However, if the Fed has said they're not going to cut unless it's really a bad jobs number, well, then you could see the market take anything short of a disaster of everyone getting fired tomorrow as possibly bearish. All right, geopolitically, yesterday, it's Fed's Kashkari is not geopolitical, but it's embedded in that. Fed's Neil Kashkari announced at approximately 2:08 p.m. yesterday the Fed would be very reluctant to ease at all this year if inflation did not get to their level quickly. His quote, "If we continue to see inflation moving sideways, then that would make me question whether we needed to do those rate cuts at all." Now, he's spoken before, but the market reacted to this. So the market's seeming a little vulnerable. In Washington, D.C., Biden had a conversation with Netanyahu, and it yielded poor results, hinting at escalation, not just escalation in the Middle East, escalation between those two in rhetoric. Of course, we're going to send them missiles anyway, but now we're pushing back. So Biden is trying to have it both ways because the election is coming. In the Middle East, there has been more open talk about direct involvement all day yesterday with Iran versus Israel. Now, Israel attacked Iran's embassy, and Iran protested that. That's their sovereign land. And in doing that, there's ratcheting rhetoric of direct involvement of Iran attacking Israel as opposed to through their proxies, and talk of Israel saying, if you do that, you're going to have a big regional war and it's not going to get good for you. All right, so the quote on that is, there are reports of potential attacks within Iran and also potential retaliation towards Israel following Monday's airstrikes. Okay. With regards to oil, while no obvious disruption would occur due to a military strike, producers would nonetheless shut down to minimize problems should military escalation occur in the region. It's bullish for oil. And then around between 2 and 3 p.m., I'm not sure exactly when, but Blinken comes out and says the Ukraine would become a member of NATO, and we're going to start pushing for that in July. Ukraine will become a member of NATO. Our purpose at the summit is to help build a bridge to that membership. And, that's also bullish for oil. So there were several things that came out that were bullish for oil and bearish for stocks. Bullish for oil and bearish for stocks. So economically, bearish for stocks. Economically bullish for oil. And the reason I'm focusing on this more than usual is, if you remember yesterday, I said that the markets are setting up in this kind of Bloomberg thing, right? The Bloomberg report yesterday, that as oil rallied in 2007, right, and stocks were kind of, mellow and happy, and rates were rallying, well, that killed stocks. So I'm not predicting that, but I'm saying what you have is high rates. You have a stock market that seems complacent despite the high rates, and you have oil creeping higher, is what I said yesterday. Well, today, oil is significantly higher. Now, the difference between now and back in 2007, 2008, gold's trading 2,300. So you got to be nuts to think that this market's not vulnerable to a sell-off. And, I don't know how it's not selling off right now. I have opinions, but that's not important right now. So I'm just saying that, the world is making it hard geopolitically for the U.S. domestic policy to get inflation in check, which is all part of anti-Goldilocks. Let's move to the price action. Some notes here. Gold is capped if there's no geopolitical action, meaning there's a seller above, and I'm sure there's buying below again. But if there's a seller above, that seller will be there if the news is bullish for the stock market. However, if the geopolitical news comes out again, I don't think they're going to get in the way of it. Silver, the price spike has gotten their attention. Silver has rebalanced against gold. Expect to see silver and gold to be traded against each other again. What you're seeing right now. After the number, though, I don't know what'll happen. Miners in the green. I don't really know what to say about that, except that finally, right? Oil is the bigger problem now. I believe that's on people's radar, and people are starting to think more along the lines that we've been thinking, that 2007, 2008 analogy or analog is on the table. Bitcoin and Ethereum, they're kind of mixed up right now. Stocks finally maybe getting the message, maybe. Bonds, yield curve control is coming. Not tomorrow, but yield curve control will come if bond yields keep rallying. The dollar did not perform as you'd expect yesterday. Anyway, those are the price actions. Here's the market news. You can see that. Various explanations why oil's rallying. Here's Neil Kashkari's comment. That's how Bloomberg reported it. It was much stronger than that. Okay, so, the press is still talking stocks up. European house prices fell for the first time. Let me read this. European house prices fell for the first time in a decade last year, as strong growth in the property markets of some eastern and southern countries was masked by declines in many northern EU states. Yeah, neoliberalism, neo-Keynesianism is dying. Okay, and with the immigration inflows into Europe, you're seeing a flight. The north is moving south. It's warmer. I don't know. It's cheaper, and there's less of a constrainment on the social safety net. And you're also going to get an immigration east, because those countries are conservative, more protective of the immigration status, and they're going to be a little more desirable if you're, it's a little bit less of a Western mentality. And I want to remind you this: what happened after World War I and World War II? Well, Europe came to America. This is going to happen again. So they're talking about housing prices here like it's some big deal. No shit. Europe's in decline. And anybody who has the means is going to leave and come here. Okay, so America is at least the land where there is some respect for the law. And if you have money, you're going to come here because we're a step up from Europe, geopolitically and legally speaking. Anyway, so that's it. Geopolitics, you can see that right there. There's a lot of those, but I went through the ones that mattered already. Let's take a quick look at the charts. Gold, here's that behavior I talked about yesterday. Gold started to weaken. Let's see, where are we? Thursday. Okay, so gold was ramping up during the day. Gold opened weaker, okay? And then it started to rally with the geopolitical news. And then Kashkari talks and gold spikes, which made no sense at all. Makes a new all-time high, and then someone comes in and just destroys it between 3 and 4, right about the time the Blinken news came out. All these moves are not consistent with what's happening now. But anyway, the market goes back up. So I'd have to say this whole day, if you go down to a daily, if you take all the conspiracy stuff I'm thinking aside, there's nothing unhealthy about this behavior yesterday. You look at it for what it is. It's a long wick below. This is all the selling that came in. Now it's unchanged. This market wants to go higher. That's it. The question is, will it be allowed to, right? Quick look at silver. Silver, similar, but still under pressure because of the gold-silver relationship. But you could also look at it as economically. If we're headed into stagflation, that should mute silver a little bit. Anyway, oil. I'll show you the hourly so you can see the oil chart. So oil, grinding, it was up, grinding, and then at 1 o'clock it starts. Well, actually, it bottoms at noon, right? It bottomed when Europe closed, put it that way. At 1 o'clock, it starts to take off. At 2 o'clock, it really spikes up to here, right? And then it settles down. So this market is telling you something. Oil and gold and bonds are telling you should not be speculating long stocks right now. That said, we could be up 50 handles today. I have no idea. I'm Vince. Have a great weekend. Talk to you later.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is 1 ounce 2023 dated silver Krugerrands for only $3.10 over spot. Krugerrands come from the South African Mint, one of the 6 major sovereign mints, and are IRA eligible. Find out more by calling Miles Franklin at 833-326-4653 or email us at arcadia@milesfranklin.com. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.